It's Friday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up we have Andrew Cox here to give us a DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday carrier update presented by PowerFleet. I'm Zach Strickland. So we've been watching our tender rejection rates bounce around a little bit this week, and I've got it broken down by region here. Our outbound tender rejection index broken down by regions. You can see that all of them are kind of moving in a similar direction, but the leading one right now has been the Southwest in the yellow, but the leading one right now is now back to the West Coast. That is that Blue Mountain, and that has been one of the more that's been one of the regions that's been driving a lot of the capacity tightness in the United States here over the last several months, and specifically it just took back over the top spot here in the last couple of days or so, and a lot of carriers out there are droning to the West Coast right now. They're just hovering right around there, trying to make sure that they take advantage of the incredibly high spot rates that are coming off the coast right now, specifically around Los Angeles, Ontario, etc. There's just a ton of freight moving off there right now. The rest of the markets, the rest of the regions, they're moving similarly. Some of them are bouncing up and down. We are starting to see a little bit more tightness in some of these smaller markets like we talked about yesterday, and that's driving up some tender rejection rates in some of these smaller regions, but the Southeast specifically having a little bit of tightness show up, but not in Atlanta, as well as the Midwest, again, not in the larger markets, as a lot of carriers have figured out they can go to these larger markets, get some high spot market rates, as well as increase volumes. So I guess the big question is how long is this going to last? This is the outbound tender volume index for both Ontario and Los Angeles. We thought we were seeing a little bit more of a softening. If you're looking at that Blue Mountain right there down on the bottom for Los Angeles volumes, we thought that things were settling down a little bit, and they did. Volumes were starting to come down out of Los Angeles, but not so much out of Ontario. Ontario volumes there in the pink did settle for a second, but you're talking about starting to rise back up again. Again, this is kind of the nature of watching something on a daily basis. You see these volumes kind of fluctuate a little bit, but the overriding trend line is still up and to the right for these markets. Volumes continue to be, they're derived a lot from the ports out west. So there's a lot of DCs out there. You've heard us talk about this a lot. There's been a lot of port volume coming into the coasts here over the last bit. And this is illustrated right here with our customs data. These are our customs shipments that have cleared customs going into the Los Angeles ports. So that's going to be the ports of Long Beach and Los Angeles both. And you can see right there at the end, just here over the last week or so, the overriding trend has been higher. But the last week or so, we saw a huge spike in imports clearing customs, which does transload into warehouses, into these containers. They get drayed, etc. Some of them are sitting across the port, of course. And then over there on the orange line, you can see this is backed up by the Freightos Baltic exchange rate. Now, this is the spot rate, the average spot rate for shipping 40-foot container equivalents across the ocean from China to North America's west coast. Of course, our customs are not dialed in just to China alone, but the rate itself is China to North America's west coast. And you can see capacity was an issue earlier in the year, but now all that capacity's come back online and rates continue to increase, suggesting that we are still seeing a lot of demand, increasing independent of the capacity reduction. So demand side contraction now driving those rates higher. Import volumes still coming in. Los Angeles volumes back on the rise. So what does that mean moving forward? Right now, we're living in this extremely hot, volatile market. Volumes are still on the rise. This right here is our ocean bookings data. So this is stuff that will not hit the ports for another 3 to 6 weeks. And I've got our Los Angeles stuff pulled up here. You can see this right here is indicating that we are actually about to see less volume coming into the ports because we're not seeing the amount of bookings, at least on the year-over-year level, that we did prior in July, et cetera. We had been seeing bookings start to increase, ramp up. We had a strong July in terms of bookings information. This stuff looking like we're not seeing the same amount of bookings. Now, that could just mean that shippers are waiting a little bit before they book this freight, as you do see that it does kind of tighten up there in the early part of the week. But later in the week, still a pretty big expanse. And time will tell if August keeps this momentum on the West Coast. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to the DHL Supply Chain Pricing Power Index update. I'm here with the one and only Andrew Cox. Andrew, what's the latest?
Anthony, we kept it at 80 this week. It's kind of more of the same. The carriers are kind of solidifying their place, their pricing power at a pretty high rate. Again, this is a historical high. So we've been doing this back since last September, so about a year now. This is by far the highest number that we've been at. We've been here for now. This is the second week in a row we've been at 80. And really, I mean, it's, again, more of the same. We see Mo volumes, Mo options. This gives carriers that have a lot of optionality right now, and they're exercising that. We'll get to the outbound tender rejection index in a moment. But, you know, just continue to rise. We have to think that there is some rejected tenders baked into this outbound tender volume index, but in any case, volumes are up, you know, 15, 20, 25% year over year. So volumes are very strong, and carriers are really enjoying that volume throughput.
That's right, and it's almost like every week I ask you, is this sustainable? And you let me know that there is not quite an end in sight, and it does seem that way.
Yeah, I mean, I personally don't think it's sustainable, but every week it just keeps going and going. So, I mean, we're seeing durable goods demand stay really strong. People are filling that service need, or that service lack of spending with more goods. So we're seeing more people spend online. I mean, this is translating into every segment of the industry. You know, we look at those China to West Coast rates. They're now above 3,000 for the second time ever. So there's a lot of demand. Goods, people are spending money, and that's really translating into freight volumes. So we got rejections, as Zach just said. We had about a 5-day little drawdown there. We had a multi-day decline in the outbound tender rejection index. That has picked up a little bit now, is now pushing upwards further. If we look at this on a historical basis, this is our same graph, just looking at it on a 6-month to full year basis. The blue here is 2020, 2019 in purple, and 2018 in green. You know, we may hit that upper band. We're actually going to write a paper on this, I think, from the Passport team, where we talk about maybe what's the upper band of rejections before, you know, dynamics quickly change. You can see, I mean, here it hits 25 and it comes back down. It hits 25 and it comes back down. So we're thinking that there is some kind of band there, which means we may have a little bit more room to run on the rejection side. So this 21 might not be the peak.
And so when we're looking at these tender rejection rates, I mean, it's, as you mentioned, your team's going to be putting together that piece, but there was, I think, earlier on in the year, some disconnect between the rejection rates and the volumes. Are we still seeing some of that?
I mean, I think it's more stabilized now. Early in the year, we saw rejections spike up really fast as we saw volume spike up really fast. And in the second kind of run up here, we've seen volume slowly and gradually rise, and the same with rejections. Carriers were much less reluctant to reject volumes when they started spiking back at the end of April, beginning of May. But now that we've gotten to the point where this volume level seems sustainable in their eyes, they have been rejecting rates at a rejecting contracted freight at a very high rate. And this is just, we're putting a lot of upward pressure on spot rates. This is the DAT long haul van rate, and we're seeing rates nearing that 2018 peak. Again, blue is 2020, purple 2019, and green 2018. Where we're just right there. We're just a little bit under $2 a mile. It doesn't seem like there's an end in sight. You know, we've just been on slowly climbing. Carriers are still rejecting a lot of freight. There's still a lot of volume. There's still a lot of demand. So I think we're going to still see spot rates climb up a little bit higher.
Excellent. And you mentioned it earlier, your Passport team. Where can people find more insights from?
Yeah, you can always go to freightwaves.com/passports. I know JP's team has put out 3 magnificent articles this week, as they always do. And then, yeah, all of our stuff's there on freightwaves.com.
Excellent. And real quick, what are your expectations for the DHL supply chain PPI?
Next week, I mean, it's really going to depend on if volumes continue to stay up and rejection rates keep to push higher. I think we're going to see this DAT peak over 2 next week. I think we're going to continually to see that dial go to the right. I mean, we're almost towards the end there. I mean, 100 is the highest power that we could have to the carriers. We're already at 80, so this is a very dominant market for the carriers. And that's the thing about this market. Things change very quickly. Back in 2018, people were saying that, you know, that we're going to have a new normal, that things were changing for structurally. But then 3 months later, the entire market shift, outbound tender rejection rates, you know, came down very quickly. So we may see that again. But right now, carriers are sitting pretty.
Excellent. Andrew, thank you so much. Insightful as always, and thank you so much for tuning in. That's going to do for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. And that's going to do it for this Friday edition of FreightWaves Now. As always, you can check us out on our FreightWaves TV app on all your favorite streaming platforms, available on Apple TV and Android platforms. Thanks so much for tuning in, and we'll see you on the next episode.